Welcome to another episode of the Kinvestor Report, where I sit down with industry experts to discuss the market, commodities, stocks, and the economy. I'm your host, Arlen Hansen. As always, this interview is not investment advice, nor am I a professional advisor, geologist, or engineer. I have been investing in kicking rocks for over 24 years, visited mine sites around the world, chatted with hundreds and hundreds and hundreds of CEOs, and certainly taken a bath or two in this market to learn a couple lessons. Any financial any financial interest Kin has or myself has in any stocks mentioned in today's interview will certainly be mentioned. Do your own due diligence. Today, I'm honored to bring on John Doody, the former editor of the Gold Stock Analyst. You might have remembered his newsletter for years and years and years that was kicking around the market. His new newsletter, John Doody's Fave 5 Gold Stocks, brings you his best picks based on upcoming events and recent situations. And John believes will give you the best possible future gains. But I'm super pumped to pick his brain. He's been a gold bug forever and a day, and I'm sure that him and I are going to have something to chat about. Certainly not going to be Bitcoin though. John, thanks for joining me today on the show. How you doing?
Well, doing pretty good. It's a Tuesday, a little rainy in Florida, but it's still around 80 degrees. So,
Right on. But I first want to talk to you about the market and the gold stocks, of course. That's why we're having you on here. You've been tracking these gold markets for decades, right? What's the single most important macro driver you think investors should be looking for
right now,
right now?
it's Trump. Trump.
Trump.
The chaos from that Trump brings to the market, the uncertainty, and the tariffs. Who's going to be the next Federal Reserve head? Trump wants lower interest rates. We know that's always good for gold. And his helter-skelter policy-making methodology, if you can call it a methodology, is creates a chaos that's great for gold.
Yeah, so like just the back to that uncertainty. Like I remember way back in the days, it was always uncertainty that drove the gold market. The last 13 years, there wasn't as much uncertainty yet. It didn't really drive the gold market. Now it seems like it's coming back, right? And
Yeah,
do you think that's the uncertainty just for the currency, certainly in the Federal Reserve, certainly the uncertainty of war? Like, what do you think the biggest uncertainty is? Just the headlines or the media?
yeah. Well, we got 3 more years of Trump, and I think that we don't know what he's going to do. I mean, he's shown us to be a lot more able to do things than we expected from any president until now. I don't know what he's going to do next. I don't think anybody does, and he probably doesn't know either.
I don't think he knows either, John. Okay.
Well, it's everything's off the cuff.
Yeah, yeah,
It's like whoever talked to him last
yeah.
is that's the idea in his mind.
We all have a friend like that, don't we?
Yeah.
Um, is this current gold bull market like fundamentally different from past cycles you've analyzed? And like, if so, what makes it different? If so, what makes it the same?
Well, what's driving it is lower interest rates and a weaker dollar. Although the dollar's down about 10% this year, it was down 10% last year, and that translates through to a higher gold price. Um, and I expect that the dollars will be going to be weaker, 10% weaker next year as well.
Hmm. Well, there is like a 25, 30-year trend that just says the dollar gets weaker and weaker over time,
Well, in
period.
gold terms, it's got weaker since the $35.71, right?
Yeah,
So it's 50 plus years of in gold terms.
yeah, yeah. But anything different than the previous cycles, do you think, or you think this is just, hey, weaker dollar, higher gold price, period?
Well, you know, hard to tell because I can't remember that far back. So, but it's basically uh, it's not the 1970s bull market that drove gold to 800, and and uh, so it's because it's not a highly inflationary environment that we're in. We have inflationary, but it's not really under control, but it's closer to being under control. The Fed will accept a 2% rate, maybe we're at 3%. So that's we as investors we shouldn't accept that, but Federal Reserve will accept that because that 2% inflation sort of greases the the economy's wheels and it keeps things going. And we know that 0% inflation is really tough on the economy. So I think that the net of it is that we're going to see a lower dollar next year, and due to lower interest rates, and maybe lower oil prices now too. I mean, the article in today's Financial Times talking about the glut of oil coming, and oil into the $50 is almost a certainty. And that'll please Trump certainly and please everybody because that'll bring inflation down. But it's not the inflation now is not onerous unless you're on a fixed income or you have limited ability to increase your income.
Hmm.
You know,
Hmm.
you're a regular worker, working on a gig worker or something, you're not gonna have much power to increase your income.
Yeah, yeah. Okay, so you've been a gold stock analyst your entire life here. Are you of the opinion that gold stocks are really the best way to get leverage in this type of environment? Like, do they really outperform gold in today's cost inflation environment?
They do by a factor of 2 to 3 to 1. Yeah, and but not all gold stocks. That's the mistake most people make. Some people say, I need a gold stock in my portfolio. Well, there's only a couple of gold. If you're only going to buy one, there's only a couple of gold stocks that qualify, and they're not the best for making capital gains. But like Agnico Eagle is certainly the best producer, but they're selling, they're stretched in their valuation. We look at operating cash flow multiples. What's the stock price now versus the operating cash flow of the company? And over time, operating cash flow averages around six times for the industry producers. Um, and now it's around 8. So it's a little stretch, but it's been 12. Yeah, and we look for companies that are selling below the average operating cash flow multiple. So our average for our favorite 5 stocks is between, I don't know, 2 and 5, and so that gives us confidence that because they're undervalued, really undervalued. Most people say gold stock is undervalued. They don't know what they're talking about. You don't know something is undervalued until you know what the average value is in the industry. And we track, about 30 North American, South American-based miners, and that's our average that we work on. And the average is around 6x. So the current favorite stocks are all selling below that average.
Do you find that these ones that are selling below the average, that there's a common theme amongst them? Like they've had a bad quarter, or they've had poor management, or some sort of change, or is there a common theme amongst them?
Well, they've all had a problem, and one had a tragic accident at a mine, one of their mines that was in Turkey, and and so that is held them back. Others are waiting for a permit, and the permit is that the even though they've got a feasibility, we don't cover them unless they're either in production or they have a feasibility study that they'll be profitable to produce. So we have one that we like that's waiting for a permit, and it seems like that permit's going to issue, but you never know until it issues, and so there's always so that's what we call the jolt factor. We look for stocks that are reasonably priced now in their current operations, and they have the potential to jolt higher because something happens. Like actually the favorite 5 is now only a 4 stock portfolio. We sold last month. We sold one of our favorite 5s because the jolt happened, and this company had gone from 6 to 40, and on the premise that the jolt was going to come, and then it happened. And so the reason for owning it wasn't really quite as strong as it had been. It's still a good company, but we saw the potential of either being stagnant or nothing going on for a while. So we sold it. We're still looking for our number 5. There's not a lot of companies. the market has done pretty well for most gold stocks, and so no matter what you've owned, it's almost hard to have had a loser. And you've had some that have not done as well, but the one we sold was up 60%. I mean 160% in the short life of our publication, which is 18 months. So that, but the average portfolio stock that's still in the portfolio has that much more to go, and they're up an average of you have the number here. I calculated it this morning. The portfolio is up 183% in the last 18 months, and they have 149% more to go to reach their target prices. So, um, and so there's plenty of reason to get on board.
Yeah. So when you have an exited position like that on a big win for you and your subscribers, like what do you tell new investors on how to take your time and continue to stay diligent? Like it's so easy that you get a big win, you feel like you got all this money in your pocket that you're like, "Oh, I'm smart." All of a sudden, that's a common mistake like a lot of investors make,
Yeah.
right?
Well,
So how do you
it's
find
easy.
value again?
Well, that's the problem. I've been searching for that number five for the last month, and some of them there's one that we'd like to see it permit issue, but others have done mo risen more than they should have. You so we're sort of off the scale in terms of whether they're viable again. We look for companies that can double. And otherwise, you're just buying a gold stock. It's going to go up with the gold price goes up, and that's not really an investing strategy. That's just riding the wave. And
If you can't get a double, like what's the point of putting money in this risky industry?
yeah, well,
Right?
that's certainly the point. Yeah.
Yeah. Yeah.
So so I don't know what the next Fave five is going to be, and although I've been working all month on it, and and I have reasons to reject some and reasons to be watching others closely. But it's a small universe too. We only cover about 30 stocks, and we don't want political risk. We're not going to be in West Africa. That Barrick has shown us the folly of being in West Africa with the 600,000 ounce a year mine that the government took, and now they're giving back on some basis, but we don't know that basis. But I don't want to take that chance, particularly with five stocks. You can't have the risk of a stock collapsing, and so that so we're really constrained by being in the Americas. Um, Australia is interesting, but they don't report on the frequency that we do in the United States. They're only every twice a year, and also there's no information flow from Australia to the United States. So Canada is a much better flow of information to me as an analyst than Australian stocks. And the Australians are funny too because most of the stocks sell for pennies.
Oh, billions and billions and billions of
Yeah, billions
shares.
of shares outstanding. Yeah, and so it's hard to get people excited about a stock that's 2 cents that might double to 4 cents,
Yeah.
and because your transaction cost might be half your profit. So
Yeah.
so it keeps us focused on North and South America. Chile's good, maybe Argentina, Mexico iffy, depends where, and but we love Canada. We love the United States. We love if the Barrick and Newmont agree to spin out a Nevada gold mines industry, which would be Barrick doing it because Barrick has 61.5% of Nevada gold mines, and Newmont has the tail end. But Barrick could give up 10% and still have over control, and create an industry that would sell for very high premium to Agnico Eagle, sell at a multiple 10 to 12 times cash flow. And it's a great location, 2.5 million ounces a year of production. And I think Barrick's setting itself up to do that because now they're telling the market that they're looking at some kind of a value creating transaction. So if they do that tomorrow, that would be my number five. Depending on the price, though, we don't know how they would price it. I mean, um, if it was priced at 6 times operating cash flow, that would be great
Yeah.
because we think it's worth more than that. Who
Um,
knows?
for our listeners, talk about the philosophy behind your Fave 5 methodology. I think that's important.
Yeah, okay. Well, we don't follow explorers. I'm not a geologist. Even geologists sometimes aren't geologists because they they're predicting the future. They're using drill holes can be 10 feet apart, 30 feet apart, 100 feet apart, depends on the nature of the deposit. But so when you drill the hole, you're making a bet that all the stuff in between those holes is going to be what you've got in your drill results. But sometimes they're not true. Rubicon was the one that collapsed because what the estimate that they made of the resource was not true. They had the unfortunate problem of the drills all hitting higher grades than what the average was, and at the average they didn't make any money. And Grouse Creek was a heckler problem, same thing. So there's a little bit of keep your fingers crossed when even when you're looking at drill results that are to the proven and probable reserves because you don't really know what's in between. But anyway, so we only want companies that have a feasibility study or are in production, and and we want them in politically safe areas, and we want them with some kind of a jolt factor. Like this company that which I'm not going to reveal because it is a favorite five. It has a mine. It's got a bunch of mines that are producing of 400,000 ounces a year. It's got a 150,000 ounce a year mine that's shut because of a mine problem that it had. Workers died, but that was 2 years ago. And I think and it's in a nation that likes production of gold, and I think that's going to get okayed in the next year to reopen. And I think 150,000 ounce a year mine added to its current 450,000 ounce a year mine is going to give it a jolt. It's already selling below our average on the existing production, but when it gets this other mine into production, it'll get jolt higher. I think even from here, it's got a potential to double. So, um, so that's about it. I think that, and I think that people say, well, why five? Well, it's a nice number. Five out of roughly 30 we cover is enough to, if one doesn't do well, you're not going to die in your portfolio, and the others doing well should offset it. And stocks don't often go to nothing anyway. They fall off for a while.
Well, not when
And
you're not looking at explorers. Like we've certainly seen explorer was go to nothing.
yeah, no, they can go to zero. Yeah. No, we don't look at them.
Yeah, yeah. So you
Every
basically,
company we follow has an exploration arm.
yeah.
They may come up with something, um, but out there stomping around in the woods or the desert looking for a deposit is not a way to make money as I see it. But these guys, the IR guys, all tell a great story. If you get into, you see them at the PDAC at Toronto or the Vancouver,
Oh,
exchange annual event. They tell a great story, and that's a problem with most gold investors. They have too many stocks. One time I was at a gold show. Guy came up with me, showed me his printout of 3 pages of gold stock. He must have had 100.
He's trying to kiss
So
all the girls. You can't kiss all the
yeah, that's
girls.
that's right. Well, at best, he's going to be equal to the averages of the market, and at worst, he's probably going to be below it. So that have to be have some selectivity, and so I think five is a number that works sense in most senses, and you can follow it even if you don't. If you somehow learn my favorite five and you didn't want to subscribe, you could still follow the five companies. But the key, I do those work for investors, and they don't have to, spend every day tracking these stocks and listening for the, things that might happen or might not happen. So we try to do the work for investors, and I invest in these stocks too. You know, you're alongside me, if you join up with us. So
What do you think, you're talking about doing the work for these people. What do you think the biggest mistake most or retail investors make when buying gold stocks?
too many,
Too many.
or they hear one story and that's what they bet their their money on. One is too few too. Unless you're going to buy Eagle. And then you just bought you might as well buy an ETF or you might as well buy gold itself. You know, Eagle's a great company, great quality company, but there's no jolt factor to it. And nothing is going to make that stock double overnight. It may double in 5 years, but it's not going to double overnight. And I don't have a 5 year horizon. I've got a 1 or 2 year horizon. In my prior publication, which you know before, Gold Stock Analyst, we covered 60 stocks. And I wrote that for 30 years. And I sold it to Stansberry after 25 years and wrote again for another 5 for them. And they didn't have another horse in the stable that could replace me when I retired. And I really did retire. So they folded the publication into something that, wasn't really related. And I came back to writing John Doody's Fave 5 goals just because people found me. You could Google me and find me and bug me. Why can't you? I have a Joe Friday's approach to writing. It's facts, man, nothing but the facts. And I don't write in some florid style with a million adjectives or something. It's here's what we see. Here's what we get to for an answer, and this is what we think you should do, and it works. A lot of institutional subscribers as well as investors with a big portfolio. And it's amazing how many investors have a big portfolio. $500,000 is a typical, you know, individual investor portfolio who's in gold. Maybe that's all they're in, but
Yeah. What do you think? So you're calling for the 10% kind of drop in the US dollar next year, or you're agreeing with some people. What does that do for gold, do you think?
well, my target for the gold price is 5,000.
Yeah, for next year.
Yeah, 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 and depending on where we are then we'll relook it. I'm not a 25,000 ounce a year guy. When somebody tells me gold's going to go to that fine. Whose lifetime?
Yeah.
Not mine.
Not mu-
Yeah,
I call for much higher gold over my lifetime, but I certainly don't think we want to see it. Like if gold goes to where I think it's going to go, it's because we got some big problems, big problems, right?
yeah. There's a lot of other problems to deal with then too, probably.
Yeah, 100%.
Load
Um,
up ammunition.
yeah. So when is there time that these stocks get stretched sometime soon? Like I'm looking at the charts and it had a hell of a run. Um, it has come back and then kind of bounced again, and now it's kind of going flattish to sideways. Do you think it just needs some time to breathe for the next kind of quarter or two? Like, have people bought into the expectations that they're gushing cash flow and stretch kind of forward valuations?
Yeah, well, companies will be reporting results for this year next February. And and this year the gold price has averaged about just under 3,400, about 3,350. So that's an amazing jump up from about 1,000 an ounce for what the companies were planning on at the beginning of the year. So this is the average, not the current price. It's the average for the year is about 3,350. And I think that number that as companies report their earnings will shock a lot of people because they're used to seeing much lower profits, and because the gold price was a lot lower, and the companies have been pretty disciplined about what to do with these profits. They're paying down debt. Some are starting a dividend or raising their dividend. And I think that they understand the return capital to investors, and I think that's going to be a trend at least for the next year. They'll go crazy at some point. A jet for every vice president, that kind of stuff. But,
Yeah.
but they can hold off for a while on that.
Yeah. Well, John, that's a wrap. Thank you so much for joining me today to hear what John had to say. You can stay up to date with John at his website, which we'll post below in the description. If you haven't already, be sure to join the Kinvestor Network by subscribing to our channel and follow us on social media. If there is not an episode out before the holiday season, I just want to say thank you so much to everyone who's listened, sent feedback, sent praise, sent, all the negative comments towards me. I take it all with pride, and just wish everybody a great holiday season, safety, time with family, filled with lots of love, and yeah, happy investing for the rest of the year and into next year. Cheers.